Welcome back here with Money. It's the time of the year when you haven't done your taxes. Well, it's time to get cracking right away. Roongta, a SEBI-registered investment advisor, is our guide who's helping us do just that. Harsh, we've discussed a lot of the instruments earlier on. You spoke a little bit about the tax planning from the debt instrument angle, right? And which is why a lot of people actually recommend that tax planning should be done more as a part of asset allocation and not as a standalone objective, right? For someone now who's looking, perhaps it's too late this year, or is there a case to be made to actually do it this year? Should you rebalance your portfolio right away, or should you now wait for the new financial year?
I think you should definitely do your asset allocation periodically, and it's always best to do it on a fixed date. But if case you were supposed to do it at the beginning of the year, haven't done it, I think at least once a year you should definitely reallocate. So you should definitely do it. I don't think you should wait for the next financial year. And within that allocation, obviously whatever goes to debt, okay, you try and maximize the post-tax return on that. Whatever goes to equity, you try and maximize the post-tax return on that.
So what would a good asset allocation according to you look like now?
So I think asset allocation will depend on each person and his needs. It's impossible to say that this is a good asset allocation. I mean, there are rules of the thumb, but in the sense of they have this regular rule about 100 minus your age as being the equity allocation, but those are rules of the thumb. I think clearly you should do it specifically for you, yourself. Beyond asset allocation, once you've allocated to equity, which you should do under professional advice. Once you have allocated this much for equity, this much for debt, clearly on debt portion. So equity, as I said earlier, is fairly tax friendly. Whether you do direct equity, whether you do mutual funds, it's fairly tax friendly. I think the issue is in debt. Most people for debt, most people invest in bank fixed deposits, which are extremely tax unfriendly. With equally, what shall I say, equal amount of risk, right, or lack of risk. You could look at instruments like an arbitrage fund, where dividend is declared every month. Okay, for a high taxpayer, it will make a huge difference in terms of post-tax returns. For debt that you are going to hold on for some long time, I think you can look at regular debt funds, because again there the income gets converted into capital, and therefore you pay capital gains tax instead of paying regular income tax. You look at tax-free bonds. Again, I mean, tax-free bonds for long-term holding, high taxpayers, makes a lot of sense.
Yeah, I'm glad actually you mentioned tax-free bonds, because I wanted to talk about it a bit as well. While the investment per se is not tax-free, the income is tax-free, right? So far we've seen an absolutely fabulous response. Anything in the pipeline that you want to recommend?
So I think we are expecting this bond issues, and we're going to see series of bond issues come up. Because interest rates are expected to fall. No one can, it is very difficult to predict interest rates, especially with the Fed rate hike on the horizon. But assuming that the general trend is towards reduction, in which case the faster you invest, the better is the rate, because the rate of the issue depends on the interest rates for the past month or so. And therefore, if the interest rates falls in the future, then future issues will be at a lower rate. So I think to the extent you want to make investments in tax-free bonds, doing it quicker is better than.
Okay, and finally, just to wrap it up, you know, this year around in the budget, we didn't see any tinkering to the tax slabs. Any such big expectations on the direct tax front for the next budget?
I think in terms of deductions, etc., I mean, obviously one wishes for higher tax slabs. I mean, there is no
that's a no-brainer.
That's a clear no-brainer. I think what people instead now, I would think that people really would want is flexibility. So the finance minister has, for example, promised flexibility to shift from EPF to NPS, right? that's a promise that has been made. It was a broader promise. It is both of them enjoy tax benefits, but if that flexibility comes, people can shift from low yielding investments to relatively higher yielding investments. At least they have a choice. They can decide whether they want to exercise that choice. So I think apart from slabs, apart from the value of what is allowed as a deduction, more flexibility in terms of lock-ins or in terms of shifting from one tax saving investment to another, that I think would really be welcome.
Okay, and that actually makes a lot of sense. All right, Harsh, thanks very much for joining in, and have a fabulous year 2016. We hope to see you there again as well. Thanks very much. I hope that was useful for all of you viewers. Let's take a very quick break. Still ahead, we've all heard of life insurance, and I'm sure there's absolutely no one who hasn't heard of health insurance. But have you heard of an insurance policy for your pet? When we return, we'll get you a lowdown on a whole lot of unusual insurance products in our segment Tip of the Week. Stay tuned.